let's start with the opening thoughts. Mr. Seth, let's start with you. What did you think about the budget from the markets angle and from your business side?
Okay, so I think, see, overall, I think it's a very pragmatic budget. So there are overall, if you see the push on manufacturing and capex, that's been the key highlight, at least from my perspective, what I've studied so far. That's one of the key highlights. If you look at the increase in capex, is the outlay for that has gone up from 11.2 lakh crore to 12.2 lakh crore. So I think that is one standout. The other standouts, from a market perspective and in general, I think I used to be in the US earlier, and now I face this problem back then too, so which is the people residing outside of India can invest in Indian equities straight away. So that limit has been increased, I believe, from 5 to 10% at an individual level, and from 10 to 24% as a consortium of holding in that company. So that again is, I think, is a very big positive. And a lot of us have actually been thinking about doing something like this. So I think that's a very big positive that the government has done. The third thing I would say again from a markets perspective is the whole fixed income space, where the government has come up with a corporate bond market making framework. And if you've spoken to a lot of people or platforms in this space, the number one thing that people come up with is the lack of liquidity, right, in corporate bonds. So that means this creates a market maker kind of a framework, so it increases liquidity and also makes sure that there are people or companies who are in need of funds can borrow. So I think that's another standout. Of course, I'm expecting this question, so I'll answer it straight away. Is like, what about STT on futures and options? And so that's gone up substantially, both on futures 150% and on options selling, both buying and selling by so 150% and 50%. And that's kind of in continuation of some of the reforms or some of the actions that the regulator had taken earlier, and now with the government increasing STT on both these options. So I would say the initial reaction of that would be negative, as we can see in the market. But over a period of time, I think that's going to normalize, that people digest the fine print and come back into the market. Second is, it also makes sure that it's pushing in the direction of that you do not do blind speculation, and people should know what they are doing, and they could be more educated in the market, specifically when I'm talking in this sense for in the derivative side. So that is it. I think the fourth standout in general for our economy, which everybody's talking about, is AI. So from an AI perspective, I think it's a blockbuster sort of visionary budget in terms of expanding funding for multilingual models, which is a need of the hour, building of data centers to build data sovereignty, because you have the entire layer, you have the entire data center layer, which is compute. On top of that, you're running models. On top of that, you're running applications. So you're building something for India. And there are a lot of concessions that they are even giving foreign companies to build those data centers in. So that would be my overarching comments on the budget.
I would like to thank you for answering that in such depth, even before we have started our round of questioning. And with that, I would like to welcome Mr. Tapse. Sir, what about you? What are your views on the budget as far as the markets are concerned?
So I think Government of India successfully delivered a non-event budget again. Exceptional case with respect to the SCT increase. But again, they want to keep every big events out of this budget, and the way they have done it for GST 2.2 in the mid of the last financial year. So I think government has that focus so that timely, whenever there is a requirement, there will be good reforms which will be announced. But I think this would be a neutral to positive in terms of overall budget outlook. But from a trader's perspective, I think there was no halwa ceremony for everyone. Certainly, when there was a STT announcement, market actually really answered everything. It was almost down by 700 points in Nifty. So overall, if you ask me with respect to what is your outlook, I think the rating would be almost like 6 to 7 out of 10.
Okay, I would like to believe that's a slightly higher rating on the positive side. So great. Mr. Satija, what about you? What's your take?
So, first of all, thank you for having us here. Let me put it like this, that I think government has come out with a very pragmatic budget. And when I say so, I saw with all honesty and humble this thing that look at where the physical deficit was. I think they've been able to get it down to 4.4. The next year, again, the projections are similar with 4.3. Clearly, I think the Honorable finance minister has laid down a path saying that we will have extra spends on infrastructure, focus on manufacturing. I think these are great initiatives to work around. From long-term point of view, one would come back and say clearly, I think these are the areas which one needs to work around. So I think from a budget point of view, yeah, like just my other panelist, Prashanth, just mentioned saying that it's become like a non-event, but because a lot of things happened during the year. So there were GST, which happened, then you had personal income tax, which happened in the previous year. So I think there was not much of scope as far as the government was concerned to be able to do too many things across that. Yeah, I think we are very, very bullish with a long-term view. We clearly believe that what government is set out as an agenda to do, I think it's on the right track. I think keeping fiscal deficit in check is what is the most important aspect. And I think they've been able to achieve that.
Okay, great. I think what you mentioned is something that all of us were thinking, that the basic macro stability is in order. Mr. Zia, up to you now. What is your take on the budget today? You're on mute.
Thank you so much for inviting me on this panel with so many celebrities on the panel. It's a pleasure. Since my focus or my expertise is real estate, and as I guess the tone and tenor of the other panelists' discussions also is pretty much the same, real estate has actually received a lot of focus and attention in last 10 odd years. Big bang reforms, whether it is RERA, GST, a lot of things have happened for real estate and continue to happen. So, while the industry bodies like the developers, etc., would want to talk a lot about expectations after the budget, but last so many years, whenever I come on these panels, real estate is never the focus on these panels or from the finance minister side. So to me, when I look at it from infrastructure perspective, because indirect benefits come a lot for real estate. For infrastructure, it's a game changer. I won't really call it that big, but then addition to almost 10% addition to the spending on infrastructure is a big thing. Talking about high-speed rails, connecting 7 corridors that they're talking about, connecting most of these key cities with a lot of other key destinations is a big move. So here, whenever my favorite example is when you go to Japan, the transportation from one place to the other would be on an average 300 kilometer per hour kind of rail networks. And here in India, we don't even cross 100 kilometer per hour. The moment we are doing that, then many of those tier 2, tier 3 cities will come in the center or focus. And that is where these high speed rails, and we are still talking about HSRs, the bullet trains or the 500 plus are really future. But when we are talking about high-speed rails, we are actually putting the foundation stone for a better connect in the whole country. And to me, that I would say is a game changer with all these HSRs coming. Of course, another freight corridor from Siliguri to Surat. A lot of these initiatives, waterways for improving the movement of stuff from within the country. So a lot of these initiatives have happened, and for me, infrastructure will have a lot of fallout coming in for real estate, job growth, prosperity, and all of that will create demand for housing. So that's how it will be. But one expectation from affordable housing perspective, we're expecting something to be done, and that's one disappointment. The mid to lower end of real estate, as it is, developers have run away from it. No developer is doing affordable housing. So today, supply side is almost dried up. Even government hasn't really given any focus on affordable housing, and that's a little disappointment for me.
Yes, it was indeed a manufacturing and service sector heavy budget this time, and I completely concur with you that the housing aspect was one of the key factors that was ignored. With that, I would like to invite my colleague Mr. Krishnakant to ask the next set of questions. Over to you, Krishnakant.
Thank you, Urvi, and thank you for all the panelists to join in. I would like to ask Mr. Satija and also Mr. Tapse, you can join in as well. How do you think that, since the market is quite unhappy with this budget, as we have seen a market tumbling up to 3% in today, how do you think this capex-led growth impacting the market in the days to come?
So, Krishnakant, let me quickly first say that the market immediate reaction was something like what Gaurav said, because you had a situation wherein there was STT getting increased on FNO. So, immediate reaction of the market post that news was obviously bound to be there. But I think if we go into the depth that why would somebody want to do that, and that too coming in directly from the government at the time when there's so much a volatile time, I think it's more to safeguard the retail investors. I think what we've seen in past over last 18 to 24 months, the retail investors are the one who've been losing out a lot of money on the FNOs. And one of the reasons to safeguard was the best way to do is that maybe increase STTs and get them to downplay this side of it. So I think the move is more coming from their side rather than just thinking on the tax aspect or the revenue collection aspect of it. So I think it was very, very clearly coming from that. I think from a market point of view, I think as time would evolve over next few days or few weeks, people would start understanding that how would be the infra thing play out, how would be the capex cycle play out, what would happen in the MSME segment, which they are thinking. I think from a long-term point of view, I think it's a very, very big positive. So we are very, very bullish on it, that we believe that initiatives on these sides would make sure that it's a long sustainable growth which one is looking at. It's not a short-term growth. So market might have spooked for one particular news, which is what happened at that moment. There was expectations that something will happen on the taxation side also, which didn't come. But I think on the taxation bit, as I mentioned earlier, that in the previous budget as well as during the course of the year, they have done some amendments both on the personal tax side as well as the GST. There's a new income tax act which will come into effect in April. So I think they didn't want to tinker much, is what one would want to say that. Yeah.
I,
Yes,
I
Mr.
agree. I agree
Yes.
with what Mr. Vikas said with respect to the market reaction. But obviously, government is trying to focus and drive you towards long-term investments rather than being a trader in the market. We have seen last 2 years how markets have been traded, and a lot of investors have converted to be a trader. And we know how the data is showing almost 95% of the traders are making losses in the market right now. So government indirectly is pushing you to be an investor in the market so that you enjoy the long-term benefits out of it. But again, when we see with a very keen inside route of the trading perspective, this rise in FNO activities will majorly impact very soon. But very, very small term of in terms of value. Government collected almost 53,000 crores of revenue out of that last financial year, and this time they have targeted almost 75,000 crores of amount from the STT. But now again, I think even they are going to fail to collect those taxes in this financial year. So overall, the government outlook is to force you to be a long-term investor rather than making a lot of uninformed decision in the market and make losses and make sure the government is earning more of that.
All right. Mr. Seth, as you have mentioned the retail side of STT hike, how do you think the brokerages are going to digest this aggressive hike on STT?
So this is a tax increase. So I would not even make the statement that we have to digest it. At the end of the day, the people who are our customers have to digest it. I think I would repeat what I said earlier. Like the key takeaway for this is that you need to make profit for tax, right? So um, people who are trading in the markets are doing it for obviously capital appreciation, making short-term gains and so on and so forth. This just puts additional pressure on what they take away at the end of the day on their earnings. So the question that you ask yourself as a customer, as a trader, is that then how can I be better so my I continue to be profitable? And that just comes to the point where blind speculation for people who are just blindly speculating the markets without understanding how this space works, I think that's going to have a negative impact on it. And that is okay because to a certain extent, that kind of activity should not be encouraged. But people who are serious in the market, they will continue to. I don't think so. They're going to be deterred by whether it is a hike in STT, etc. Obviously, it will have a material impact on their earnings for sure. And as I said, I think it could have some short-term impact on brokerages as a whole, as you can see how the market has reacted. But in the medium term and a longer term, even major changes that have come, people have been able to digest and come back to normal.
All right. Moving on with so the point is, key government has also introduced, PMS incentives. So, do you think as FIIs have sold nearly 39,000 crore in January, do you think this PMS scheme is going to intensify, or is it going to bring any foreign monies into the Indian market?
Yeah, I'm quite positive of that move. I think overall, you can't time box that if a certain number has gone out of the Indian market and that this whole scheme will get it back. I don't think that is the right way to look at it. The right way to look at it is that it broadens the base of our equity capital market, specifically with respect to foreign capital. And a lot of this foreign capital also comes from Indians as a whole, right? Non-resident Indians who are in some form of capacity actually Indians. And as I said, like they've always faced this problem of investing in Indian equities, Indian markets for a very long time, and it has been very, very burdensome to do that. So operationally and by from a regulation perspective, it is great because the money starts to come in. They are happy. They're able to invest in the India growth story. And to answer your first question, that whether it corrects for some of the money that has moved out, yes, to a certain extent, but it's hard to predict how much.
All right, thank you. Mr. Zia, how do you think the trajectory of real estate sector is going to be after this budget?
Well, real estate has been going through a great time last 2 to 3 odd years. When you talk about the sector, the developers have been, I would say, after almost about 10 odd years of a lull, we've got a bumper time with which developers are enjoying for last 2 3 years, and I'm sure all your realty indices, etc., are talking about it. But that said, the issue is that the current growth of real estate is a very, very, I would say, myopic kind of focus on the sector, because everything is a luxury, uber luxury, etc. And that's what, the sector has put their eggs all in one basket, which is luxury housing. And that to me is a kind of a big concern. And I wanted to see some kind of a push from government coming in for affordable housing, which there was none. As I was talking about earlier, even the supply side players have all left because they wanted low-hanging fruits, and you can't blame them, because for almost about 10 years they were running dry, and suddenly the real estate bouncing back, focus on upper end of the market was not wrong. They were there. But the problem is, going forward, it will not last long. And that's a concern. I would have loved to see some intervention coming in, while Niti Aayog and the others have been focusing on improving affordable housing and housing for masses, as well as rental housing. But from the industry perspective, not much of initiative or not much of a motivation coming in for them to shift their focus towards the rest of the market. But to me, it's a scary situation, because the whole of the real estate industry is only focusing on a very, very narrow segment, which is upper end luxury. Perhaps in times to come, they will have to relook at their strategies.
All right. I would also like to, let Urvi ask some questions to the panelists now.
Thank you, Krishnakant. Mr. Tapse, the next question is for you. Are we going to see the budget impact the FIIs, or are they going to move on with tariffs and domestic corporate earnings?
I think that will continue to serve this market in the negative sentiments. The way markets have really worked from last 3 to 4 months. So earnings is a major concern for the FIs to come back to India. And from last 3 quarters, we are missing out of any delivering from the loss of corporate earnings. But again, with respect to tariff, again, still everybody is on the wait and watch. Every weekend, there is some new update from the Trump administration with respect to tariff. So these are the two concerns. Obviously, if something goes very much clear before March 26, I think Indian markets will try to digest that and come back to a good normal way. But earnings are getting more on weightage.
Okay. Mr. Satija, I would like to pose the same question to you. What is your take on the FIIs henceforth?
It's a combination of 2 3 things. I think what Prashanth mentioned very clearly is that the earnings have to come up, because as an investor sitting anywhere, any part of the world, the first thing you have to see is how the earnings are. And if the earnings are in line, I don't mind putting it at whatever the PE might be. If the earnings are in line, I think I'm confident to putting. But at the same point of time, I think the other thing which one has to realize very, very clearly is that the speed of depreciation of rupee has been very, very fast. So if I'm an investor which is sitting outside India and I'm seeing a rupee depreciating at 7 8%, it really throws a jitter to me. So I think that also has to be taken into account. So that's been very clearly. So one is the earnings, and secondly, obviously, the kind where the rupee has depreciated is also given a concern. But we are very, very bullish that I think once we start seeing the earnings back into track, and which should happen over the next 2 quarters. And you would start seeing a lot of these FPIs wanting to come back and wanting to put in money, because I think they are at the rock bottom. If I look at the last 15 years, their current holding is at the rock bottom. So clearly, India is a favorable market and they would want to come back. And oil price is where it is. That gives us an additional comfort that, yeah, the deficit numbers would remain so where it is. So that's what we are up to.
That's a very positive outlook. I must appreciate you for that, sir. And now, Mr. Seth, the next question is for you, and it's a slightly general yet interesting question. Which sector do you think is going to outperform all others after Union Budget 2026?
Well, disclaimer: we don't give those kind of recommendations in our position. So I would not hazard, but I think I'll give you a general comment. I think this is if there's one takeaway from this budget, this is an infrastructure budget. And infrastructure, both physical as well as digital. And we hear a lot about physical infrastructure and capex, capex outlay, etc. So the government has done that, which is great. High-speed rail corridors, a fellow panelists have talked about high-speed rail corridors, manufacturing, farming sector, and so on and so forth. But also digital, which we're not talking about a lot, right? Which is the whole start of the AI revolution. And at least the whole, like numbers aside, the whole blueprint to build these data centers in India. There's one particular, I think, line in the budget which talks about some incentives or a lot of incentives to even foreign companies who are going to set up data centers in India and they're going to sell their services via Indian resellers. So while they're inviting foreign capital and making sure that the Indian companies also benefit from that. And that is the next gold rush, as you can see, hyperscalers across the world, which is Google, Meta, etc., investing a lot in data centers. So that is one. Second is on top of that, building those all multilingual sovereign models where we control the data, we control the models. So I think that forward-looking, impact of this budget we will see a couple of years later, because with this whole AI piece coming. So it is. So my takeaway for this is that it is an infrastructure budget, as much on the digital side to spearhead India in the AI revolution, as well as on the physical side. So you could take that as a sector, as a sunshine sector, if you were to take that as a recommendation.
Okay, great. Mr. Zia, what about you? Which sector, in your opinion, is going to outperform all others after this budget?
Unfortunately, I am only aware of real estate and infrastructure. The other esteemed panelists actually have much macro perspective, so I guess they are better equipped to answer that question. But from where I see it, and as what Gaurav also was talking about, infrastructure is the key takeaway. While the growth of 10%, if you look at it, 100 and whatever lakh crore that we're talking about, but compared to GDP, it has shrunk. That is something which I don't think many of them would talk about, because the rate of growth of GDP is much faster than our commitment to creation of infrastructure has been. Perhaps they want to put the house in order. Fiscal situations are to be improved also. But in spite of that, the spend that I see on infrastructure is heartening. And whether it is high-speed rails, tourism sectors, a lot of these initiatives that are coming in, to me, it's a great initiative. Infrastructure segment to me is definitely the big winner.
Certainly, I think even if we have a cursory read of the budget, we can figure that out, that it is a very infrastructure-heavy tier 2 and tier 3 focus budget as well. With that, Krishankant, over to you, inviting you to ask the last set of questions.
Of course. Mr. Tapse, I would like you to answer this question, that which sector is going to outperform the equity market after this budget?
I think if you focus only on this budget, I think energy can be one sector which can be highly focused. If you see the allocation, almost the highest allocation has been done for energy as a sector, 34% increase from last year to this financial year. So that can be one sector I am focusing more on, because if you understand energy need of India, I think it is growing very faster than any other industry. So in the infrastructure space, again, energy will also be part of infrastructure development. So that can be one sector which I am focusing more on. But again, not for this only 1 year. I think it can be a 5-year theme kind of story where India needs a huge requirement of energy. So energy would be one sector which I'll be focusing more on.